Welcome to Global Education webinar powered by Global Finance Board.
So today I gotta start the session of regarding auditing with legality and operation.
Everyone. So for this session, this is the last session of the Global Education webinar. Well, technically the last topic for the first session, because we will have a second session after 6 hours for those who wouldn't be able to join us at this hour, because we cater for different time zones. So we're going to tackle risk management, wherein risk management is given a better highlight this term or this midterm, because we identified that there are a lot of risks that happens in our organization. So for this topic, the FASIs would be me. I am Ram Martinez, yours truly, your GFBTL for Knowledge Management and Consultancy. For the contents, we're going to tackle about what is risk, types of risk, risk management, risk reality, and we're going to do a workspace and Q&A later on. So first is that you need to know that ISEC is working in a global context, meaning the risk environment is changing constantly. So when there are changes in terms of the political context, in terms of the decisions, within the corporate world, then we are gonna get affected, of course. When even normal risks such as in terms of operations and management, we always have to face that, because this organization, well, in any organization, you need to think about how your business will be tackled or will affect by other variables. But what does risk really mean? So this is the effect of uncertainty over objectives. So there are different uncertainties in different events. So the risk is how big of the effect from that uncertainty. So we focus on the word uncertainty because we don't know yet if this specific result would actually happen, but we are aware that there is a probability of it to happen. So risk is something that you don't want this event to happen, but there is a slight chance that it can happen due to variables that we don't necessarily control. So why do we do risk management? It is about first acting instead of reacting. So most of the time, when we are going to do our operations or events or other activities that we have to manage, we tend to react when some variables would happen instantly that we didn't really expect. But when you're going to do your operations or your events, especially when you are already experienced with it, you do have this thing at the back of your head where, okay, I had this experience before, or I've learned this from my co-teammates or my team leaders, that this risk can happen. So I am aware that if it can happen, so I need to plan. So I need to act, and I create contingencies because I am already aware that different scenarios could happen. And that is also how we connect it in terms of how we do our planning in terms of finances. That in terms of our finances, most of the time we do 3 scenarios, right? So pessimistic, realistic, and optimistic. Those 3 alone, doing those 3 scenarios, shows that we are aware that certain risks can happen, because we we do plans optimistically where this is our ideal goal, but we are also aware that there are a lot of activities that could happen that we don't want to happen. So that's why we take into account a pessimistic scenario. Next is leading through crisis. So crisis is of course a larger scale of risk. This is when it already happened. So you do risk management so that you can lead to resolve a crisis or an issue. And then you do risk management to prepare for expected situations. So risk can be expected because there is a high probability of it. So you already made plans for it on how to mitigate those expected situations. Also, you prepare for unexpected situations where these things can happen, but you don't necessarily expect them. So, but you already know how to react. So this is more on in terms of your attitude. You already know how to react towards this type of risk that can happen. Triggered events. So triggered events are these predicts or initiates a risk to come true. So from the word trigger, so if one thing happened, then there is a ripple effect. So it's just like a domino. It's just like a domino. When one domino falls, then in a row of dominoes, then every other dominoes also falls back. Trigger events can be an actual event. So for example, decision, for example, an election, it can when a candidate wins, of course there are certain risks, because there are certain scenarios that this candidate could have problems during their administration. Whistleblowing from entities and members, so this can affect your reputation, your brand. Advice from external boards or partners. So this is more on what do your stakeholders would think about your operations. And of course, these external boards and partners are important because they also compose your customers. Government warnings and country restrictions. So this is important because we do work in a global scale in an exchange operation. So this would affect the flight travels, the visas, the work permits. Faulty infrastructure. So there are actually a lot of entities who doesn't necessarily take into account their infrastructure. For example, the overhead like rentals, office rentals, flat rentals, utilities. So some would choose a cheaper office or a cheaper flat, but does not necessarily mean that it's safe. So just so that you could have a lesser fee to pay. So you need to find the balance. And of course, there's more types of triggered events, well, depending on the risk and situation. So we're going to tackle about types of risk. The first two, safety and health. So safety and health, so this is more on your customers. Remember, we handle people, we handle customers, we handle their experience. So you need to take care of the number one thing on how to keep your exchange going, which is maintaining their health. Because if they are dead, then there is no experience to take care. So you need to know that ISAC members or EPs are in danger because of health or security problems, in the location in which they operate. We differentiate between ongoing risk, for example, malaria and yellow fever, that are known and can be prevented, and upcoming risks, so such as swine flu or Ebola virus, that arise short term and are not preventable. So these two are types of safety and health risk, and in an ISEC context, most of the time, when most of the time the safety and health risk isn't necessarily immediately taken into consideration, because we have bigger things to think about most of the time. Yeah. So this type of risk is important, but usually underrated. Legal. So this is suggested responsible for finance and legality, of course. An ISEC entity face legal problems because of risk event, and identify who is legal responsible and decision making. So this also tackles about who would represent you legally. So you also need to know who is capable of doing the signatures, who is capable to represent you in terms of different government agencies and other cases that might come up. Next is financial. So of course, responsible would be the LCVP Finance. An ISEC entity face financial problems because of risk event, having to pay or losing revenue, or sometimes as well in terms of how you are storing your cash, or even stealing or theft. Reputational refers to brand positioning or external perception, where fame or reputation of ISEC can be affected. So for this one, this is more about the brand, and I cannot necessarily say what is the common brand of how is ISEC seen in every country, because of course every country have different contexts. But you need to know how is your entity or your organization be seen externally. So externally means both your partners, your customers, your board, and also your ISEC members as well, because they are the ones that you work with. Future operations. So suggested responsible SCP, risk of expanding our operations in new territories or markets. So this could relate with expansions, of course, also with investments into, and highlighting the word future, this also includes your successors, your elections. If you don't have a successor, then who's gonna continue your operations in the future? So risk management. So this is the framework how you're gonna do risk management. So let me go through it one by one. First is you establish context. Establish context means you need to know what is this event or problem or scenario that you need to think of, that you need to do your risk management. So for example, national conference, IGV project, switching into different overheads such as office and flat, youth speak forum, also in terms of opening or running different products. Would it be applicable to your market? Would it be applicable to your members? Then once you establish the context, you need to do these three things: identify, analyze, evaluate. You need to identify three types of things. First is hazard. Hazard means this is the actual result or the thing that can happen. So for example, a fire, theft, bankruptcy. it can be a type of hazard. Loss at an event, it can be a hazard. Trigger event. Trigger event is what triggers these risks or these results. So for example, in terms of the fire, so what would trigger a fire? Faulty wiring, accidents. So those are types of trigger events. Or for example, in terms of national conference, what could trigger a loss? Lack of delegates, poor storing of cash, or even improper partnership packages where you have a problem in terms of your package, and then somehow in terms of your calculation you actually need to pay more than what you expected. Then risk type. So risk type is the one that we mentioned earlier. So safety and health, legal, financial, reputational, and future operations. Next is you have to analyze. This is how you analyze. So you need to analyze what would be the effects of the trigger event, and then you analyze what are their corresponding causes. So analyze is cause and effect analysis basically of the trigger events. So if a trigger events happen, what would if a trigger events happen, what would be the effect? Then you evaluate. How would you evaluate? You would use the risk matrix. So there are two things here: impact and probability. Impact is how often a risk can happen. Probability is how often a risk can happen, while impact is how significant or how big the result of this risk that could affect you. So in a simpler terms, probability is time, impact is significance. So how would you use the risk matrix? So we categorize them into 3 points, 1, 2, 3, and then the 1 is the lowest points, 3 is the bigger points. So for example, in terms of probability, 1 is rare, 2 is possible, 3 is frequent, the risk frequently happens. For impact, 1 is minor impact, then moderate, then significance. So how would you use this? It's in terms of the calculation. It's 1 times, if there is a risk that rarely happens and could only have minor impact, then that means it's this one, 1. So how would you calculate this? It's 1 times 1. If there is a probability that could possibly happen and have a significant impact, then that's 6. Then there are cases where risk that frequently happens and have huge significant impact, then that's a 9. So once you identify these calculations, you need to do how to interpret them. So for 1, that means it's a low level of risk. So what you're gonna do is you don't need to take action, but just continue observing it. If the result is 2, the risk responsible, usually the president or the logistics or the finance or even the people who are involved with events, shall investigate or prepare mitigation plans. So this is more on you are preparing for a plan because you are aware that this could possibly happen and what would be the effect of it. Serious is you add HR people, separate HR people, and start doing a mitigation plan to avoid them. And high is you need to stop other activities and focus on solving this crisis, and you need to adapt plans if you need. Once you're done with those 3, identify, analyze, and evaluate, you need to treat this risk. So once the whole planning is done, treating risk is doing the actual activities that you planned. So this is more on talking to different people, negotiating, um, doing the necessary action steps. Once you're done with the risk, you need to know that you need to keep monitoring and review your operations, and at the same time you also need to communicate and consult what happened during your whole term. You need to give responsibility. So giving responsibility, it is important that a person responsible for each type of risk will be accountable in identifying, analyzing, and evaluating the risk. If you're gonna look at what we tackled earlier, we tackle safety and health, legal, financial, reputational, and future operations. If you're gonna look at it, it's not risk management is not only for finance people. It's also for other ISECers as well, such as exchangers, because they are the ones who's responsible for customers, and also marketing, because they are the ones who are usually responsible for the brand and reputation, and of course future operations, which is the LCP. You need to make sure who's in charge of creating the procedures, responsible to monitor ongoingly around the area of risk. No major workload. This is no major workload. It's only in case of risk situation, and in best case, the expert in area. So these are risk examples. For example, an OCP of a national conference which you organized died a week before the conference. The OC team asks you for help as a responsible person. So this can happen, of course. Your LC is in bad financial situation. Nevertheless, your LCP came up to you with an already reserved first-class flight to Afro XLDS. Canceling would cost additional fees. You have received call from tax office and informed you about financial inspection of accounting and tax documents of last 10 years. If you're going to look at these three examples, the first one is you need to know who's gonna handle the event if someone is incapable of doing it anymore. The second one is it really necessary for you to have this type of flight? Is it also necessary for you to join in the first place? And why is the mindset of you creating the decision of this huge financial amount? And the risk of the other one is more related to the government, which is the tax and the accounting, because you need them in the long run. Other examples: burglars broke into your office, then they stole all the cash. Well, you need to think first, why would you put them in your office? That's why you need a bank account and an accounting software for that. Next would be your VPICX matched 20 EPs, which could come for 2 months. But this VP together with the team left ISEC after 1 week. There is nobody in the LC, there is nobody in ISEC in your LC. Now this could happen because you need to have continuity on how you're gonna manage your customers. And even though these customers are not yet in your entity, then who's gonna continue them? One of the EB members copied company contacts from your database and used them in his newly opened company. Okay, this one is a low, kind of an underrated risk, because you don't necessarily directly see what's the harm in terms of contacting. But the thing is that the harm here is that this is an EB member who also this is an EB member who also represents your organization, and now he's going to represent another organization. Second is that this also creates competition, especially if you are in the same industry. So this is more related to the brand and how you're gonna tackle your customers. There is no applicant for LCP as well as VPF. Again, continuity. Majority or 90% of new members. That has already happened the second time. There is nobody suitable for EV. There are actually some entities who are having problems with this one because there are some changes in terms of the university rules and policies, and in terms of applications. VPF found profitable savings account, then unfortunately not an association account, so this is not under the name of ISEC. So he opened it together with the LCP, took 50,000 from the bank account, LC bank account, and put it on the savings account on their behalf. At the end of their term, LCP says the money was his and not from ISEC. So if you're going to look at it, technically the money is of course from ISEC, but there is a legal document that somehow backs this up that it is not. And also you need to be aware that you need to keep all of your finances under the ISEC name. There is no evidence about transactions in your cash box. You have real suspicion that your VPF stole 30,000. So again, put everything on a bank account. Profit from last 3 quarters is above average, but your customers have problem with paying your invoices. They owe to you more than 150,000. It seems you will have huge problems in cash flow. So you need to think of, there is a difference between revenues. There's a difference between recognizing revenues and collecting cash. Next is there is an illegal software installed. Last week, police made a control in an office of another student union and gave them 250,000 penalty. So if you're using the same software, then that could happen to you as well. There is a terrorist attack 4 weeks near to your hotel before your regional conference. So this could have a lot of problems in terms of reputations, in terms of customers, actually in terms of the safety, in terms of legal and financial as well. There were found some mistakes in invitation letter. Your EPs have problem getting visa. So how can you do exchange if this one? Your VP ICX or NOJX celebrate success. Both of them fulfilled their plans by 120%. Nevertheless, communication in the EB is not the best, and none of the signed contracts were invoiced for more than 3 months. So even though you already recognize 120% revenue from your exchanges, if the legal aspect is not properly signed and is not properly followed, then you could say that this is not completely 120%. Now these scenarios all of them are true. They actually happened in different entities. So we need to think about what could happen to your entity if these things could happen to your entity, or even worse. All right. So now let's move on to the workspace spreadsheet. So take a look at the chat box, click the link, and I'll see you there. I'll communicate what is in the spreadsheet. All right. I believe a lot of people are already here, so we'll just wait for everyone else. So first, task to do, go to the sheets, write the necessary data, and answer the general and calculation first. Once the calculation table is done, fill out the mitigation action plans where you can fill out what are the steps you believe you can do for them. Next is what's your conclusion about this risk matrix? What had you realized with the current situation of your entity? So I suggest you guys do them now. I'll give you 10 minutes for this. If you have any questions, please do let me know. Okay, so we got a question. I have something similar that I work with my LCP. Cool, yay. So if you have any questions, you can write them. I suggest as well, if you want to just specify a certain project or initiative or event in using this risk matrix, as a simulation, you can do your upcoming national conference, IGV project. You speak. If you're an MC and you're planning to do overhead changes, you can do that as well. Legal changes, you can use them as well here. Also, if you have any plans in terms of your timelines, right? You can also try that. Yeah, how do we access the spreadsheet? Lillian, I believe this is already shared. The spreadsheet, yeah, it's anyone with the link can edit. That's the sharing access. Lillian, do you still have problems with accessing the spreadsheet? Yes. Can you type down your email so that I can directly share it to you? Sandra, I'm looking at your sheet. In terms of the risk about cash flow problem, maybe you could specify it a lot further. Can you write down like cash flow problem from what cause, like from what reason, so that you could have this a lot more specific? Because you can have different cash flow problems, such as cash flow from an event, cash flow from exchange, cash flow from merchandise or fundraising, and even partnerships. All right, Lillian, I share. Oh, Lily. Oh, it's Lillian that Daniel. Okay. Elias, are you still here? Or is it just me that I can't see your name? Mhm. All right. Okay. All right. Everyone. So while you're doing the spreadsheet, you can continue them later after this session.